Global share markets have been fairly mixed over the past 24 hours, with US markets looking relatively soft. However, they did see some pickups after further mergers and acquisitions were announced. This is effectively meaning that businesses are prepared to buy each other and also suggests that they are prepared to make long-term investment decisions and looking further into the future. This is usually seen to be good news for global equity markets. To date, so far we have seen about 25% more M&A activity than we did see at this point last year. The New Zealand dollar continues to trade strongly, and while over the weekend we were trading over 77 cents against the US, we're still trading at 76.7 on Tuesday morning. There's been plenty of talk on the trading floor here at ASB about what the Australian dollar is doing, and this is because it has hit all-time high levels against the US and hit over 1.04 against the US dollar over the past couple of days. There is potential for it to go even higher over this week, considering that they do have some major economic data releases that could push it even higher. The key impacts on us here in New Zealand are the fact that the Australian dollar has also pushed the New Zealand dollar up over the past week to 10 days, and this is a key reason why we have hit close on 77 cents against the US dollar. The other impacts on us here at home, in particular in the agricultural sector, is the fact that exporters of agricultural products out of Australia have really adversely been impacted. We've already seen the Australians pull back somewhat out of the US beef market, and this has been to our benefit here at home in New Zealand. There is potential for other agricultural commodities to be impacted down the track if the Australian dollar remains strong. New Zealand's sheep schedule prices continue to look very strong, and this is a reflection of the fact that demand is looking pretty good from our main export markets. One positive that we are expecting to see in the sheep market through this year is the fact that the New Zealand dollar should weaken against the pound at some point. The UK economy has started to perform reasonably well, and for this reason we are picking that the pound will start to strengthen against most of its major currency partners. For this reason, the Kiwi dollar should weaken, and we're picking that this could be up to around 10%, which will provide some benefit to farmers back here in New Zealand. There's very little to suggest that we're going to see decreases in sheep schedule prices anytime soon.